Just going to wait a few more minutes here for a couple more people to join here, and then we'll go ahead and get started. Hope everyone's having a good day today. It's almost the end of the week. That's nice. Hopefully, everyone has good plans. It's going to be a pretty warm one today or this week. All right, we'll go ahead and get started. So, I want to welcome you guys to the First Time Homebuyers webinar. My name is Jose Santoyo. I am a mortgage loan originator and a realtor based out of Southern California. I've been in the mortgage and real estate industry for a little over 15 plus years. I been helping out quite a bit of individuals buy homes, and just made it my journey to in life to help others. So this is how I give back. But in any case, this thank you again for joining us. This is going to be a series here that we're going to go ahead and conduct. And so I want to go ahead and provide you guys with some basic knowledge on home buying. Now, I know there's a ton of information out there, whether it's social media or, with AI and ChatGPT and Claude and so forth. You can get a lot of information, but what I found that individuals like is that still that that voice in that field to the steps. So I know, like, when I get into trouble with IT, like, I can read so much, but I like to get someone's voice over to kind of help me out. So hopefully this will help out. If you have any questions, feel free to go ahead and type it into the chat box, and I'm more than happy to help you guys along the way. Okay. All right. So let's go ahead and get started. So tonight we're going to go ahead and cover a couple of different things here. And so we're going to go ahead and look at the financing side of things, whether it's mortgages, and then the other portion is going to be the real estate side. So anything having to do with the home buying process, things that a real estate agent would do. So again, I do both. So I'm in a great position to have a good understanding, a clear understanding of what's going on throughout the entire transaction. Now, no knock on anyone that just focuses on one or the other, but typically whenever you have a scenario going on a purchase, you're kind of um, you're focused on one specific thing. So things can pop up that you might be, you might feel blindsided, but that's again because you're usually just focused on one side of the transaction and not the whole thing holistically. So I will be speaking to both the finance and the real estate portion of it. So we're going to go ahead and cover the financing side, starting with getting pre-approved and why it's the very first step. Down payment options. Again, a lot of people still may not know that you do not have to come in with a large down payment, such as 20% down. Also, want to go ahead and cover how your credit affects your interest rate. And we'll lastly want to cover what closing costs really are. So, with the best information out there, that tends to be missed or not covered quite a bit. So I want to make sure that you guys are fully aware of the transaction in its entirety. Okay. The second side of things we're going to cover on the real estate side is finding the right home for your needs and your budget. What makes an offer competitive, not just the price, the inspections and appraisals, how they help you, benefit you, and protect you. And then last but not least, the escrow timeline, everything from the start of your journey to getting your keys. So hopefully all of you guys are starting, the journey here, what I call the home buying journey, and I'm happy to walk this path with you guys. So feel free to go ahead and take notes. I will be able to send this out to you guys in a PDF version for you guys to keep, and just go ahead and email me or text me your information, and I'll send it out to you guys right away. Okay, so let's get started. So pre-approvals, pretty straightforward. Get pre-approved before you shop. So from a mortgage standpoint, the best thing we can do is to help an individual clarify their goals, right? And so, we have an idea of what we want to accomplish. So the goal is to buy a home for various reasons. And so the main thing that us lenders do to try to help you is to determine your affordability. Now, right here I have noted you can do a couple things, right? You can go with a bank, a credit union, mortgage brokerage like myself, and you can run some basic numbers where this is where a someone who does mortgages kind of takes your information. It doesn't necessarily run a hard inquiry or run they might gather some basic information from you and kind of give you an idea and assessment, like based off of if XYZ is correct, this is more or less how much you'll be able to afford, and this is how much you need, right? So it's fairly basic, nothing solid. Whereas a pre-approval, that's where we actually take the time to gather your income documentation, your bank statements, retirement things that an underwriter, someone who's reviewing the loan file for the bank or the investor will like to see. And so a lot of individuals think like, hey, I ran my information on a calculator online, and this is more or less how much I can afford. While it is helpful, that's not the whole story. So on the mortgage side of things, what we do is we tend to look at what these three items: your credit, your income, and your debt to income ratio. So we look at everything holistically, right? And so this is going to give you the blueprint on how to achieve your goal. And then so needless to say, you are better off getting a full pre-approval where, we take it to an underwriter, they review it, and that way they give you a solid approval amount. So that way you can shop in confidence. That's the biggest thing. Most, files fall out of escrow is because, the lender doesn't clearly define the underwriting requirements. And sometimes we don't know until we know, right? So by then it might be too late. So what do lenders look for? First and foremost, we do look at credit. So you're looking at your credit score and your history, okay? And then obviously this impacts your interest rate and how much your mortgage payment is going to be, and so forth. So it's no different than buying an automobile, or applying for a credit card. So what an investor or a bank or a lender is looking for is more or less trying to get an idea of how an individual treats their credit. What's the repayment history like? Have they, are they opening up a lot of credit cards? Do they have a lot of debt? Do they have years of credit invested, or are they fairly new? Are they, not that there's anything wrong with being new, is that, the only challenge that it becomes is the only way that they can try to determine the future is by looking at that past, if that makes sense. Okay. So if you're good with your credit, and you've done, you've had great decisions and been able to keep up with your payments and so forth, then the likelihood that the credit's going to favor your application is going to be better. And then so you get rewarded by getting a little bit a better interest rate. On the flip side, if you've had credit challenges, and we're all human, so don't feel like just because you missed a late payment or something, so you hit some bump in the road in the past, that it's going to automatically disqualify you, which is far from the truth. But with that said, it does provide a glimpse of, hey, this individual may have had some credit challenges in the past. Again, they can't predict the future, but if it's consistent, or let's say there's been more than one item, then they're gonna go ahead and score your credit a little bit less favorably than someone who's never made a late payment in their life. Okay. Income. By far, in addition to credit, this is probably like the most important item that you can, look at when qualifying a loan application. So the income is going to give us the information on how much can you afford, right? So that plays into the overall affordability because, if let's say you're looking to buy a home in the let's say $600,000-700,000 range, then we're gonna need to make sure that you're gonna be able to afford that monthly mortgage payment. So it's just getting an idea that you have your ability to repay. Now, there's a ton of different ways that that income is structured, and not everyone has a W-2 employment where they get paid a salary or a hourly wage. So, there are different loans for different income types, and we'll cover some of that a little bit later. Okay. But just know that income just basically gives you the ability to, get an idea of what you can afford. And then when you basically take your income, add in a monthly mortgage payment, and then your overall, and if you have any liabilities, such as auto, student loans, credit cards, and so forth, the overall number we're looking for, that's called a debt to income ratio. So, that basically means, if we take your monthly mortgage payment, plus any debt, divide that into your income, and that's going to give us a ratio. So, depending on the type of loan you get, it's going to require a slightly different ratio. So, there's not one that fits all, right? A solution. So, we'll cover that with the loan products as well. Okay. So, but this is basically your overall, information as far as like what to expect when, looking at getting approved. Now, the main takeaway here is, between getting pre-qualified and pre-approval is the pre-approval letter. Once you have that in your hand, it's your gold. That's like your golden ticket, right? For you to be able to shop and make offers on a property that, fits your liking and your budget. Down payment and credit. Okay, so going back to the first slide that we covered, in yesteryears, right? It was required that, most buyers came in with a minimum of 20% down, for when they're financing their properties. Now, obviously, times have changed, property values have increased, wages have changed. For the most part, and so which required a whole new restructure of loan programs, and so I have the 3 to 5% down payment because that's common for first time home buyers to come in with, right? So versus putting 20% down, if you could do it and you have it, by all means, the more money you could put down, the better it's gonna put you in a better financial position overall. You're coming in with more skin in the game. Also, another thing, if you do put less than 20% down, you do have to put or pay on a mortgage insurance premium. So on your monthly payment. So that's pretty much a guaranteed fund just in case of a future default. So, you're kind of paying, it's like fire insurance, right? You're always paying for insurance if in case of an accident. In this case, the accident would be not being able to make your mortgage payment. And if it were to come down to, there's a loss, the lender would have, portion of their funds covered from that loss from that mortgage insurance. So, where does your down payment come from? Well, there's a lot of different types of down payment sources. The most common ones are personal savings. So if you guys have been putting money away in your savings account, checking account, also I've helped people that put money down from their 401ks, stocks. There's a lot of different options. Also, if you're selling a home, you can use the equity as a down payment. Gift funds from family. If you're fortunate enough for mom and dad or grandparents or someone, uncles to help out with the down payment, that's amazing. I would never tell anyone not to do it. Yeah, it will only help you guys out further. Now, there are some caveats to that, but again, it just depends on the loan product. So it's going to depend on everyone's individual scenario. So, but there are some caveats to it to who and how much can be given depending on the loan program and your situation. We have down payment assistance programs, whether they're coming from grants or the government or there's a lot of different nonprofit agencies out there. So there's a lot of down payment assistance programs that can be used. Now, there are some requirements for some, while others, they tend to be a little bit, favorable for true first-time home buyers. But there's a lot of programs out there, So again, given your different scenario, we can take a look at a different option, for each program. And so some may be good, some may not fit, but it's always good to know that you may have an option there for that. Low down or no down payment program. So again, FHA program is a very friendly first time home buyer program. You usually combine that with down payment assistance programs. That allows the buyer to come in with 3.5% down. If you are a veteran, first and foremost, thank you so much for your service. We do greatly appreciate that. And for that, lenders do offer a 0% down payment option for you. Okay. Again, these programs are available. These are what they call government loans because they are backed by the government. And if you have any specific scenario that we can look at, that's again, these are, I can't even stress how much like every scenario is going to be a case by case scenario. So not all are fall into the, conventional loan types. So your credit and your rate, right? The higher the credit score typically unlocks the lower interest rate. So again, going back to that first slide or the second slide, having good credit is important. It's not the most important thing, but it is important. Again, if you can help and reduce your monthly payment by having a good credit score and even being able to qualify for some of these programs, that it's all worth it, right? Closing costs. Closing costs, we'll get into a little bit more, but just know that in addition to your down payment, people just always forget, hey, you have to pay for the loan or the buying of the house, right? In addition to your to the price of the house. So there are third party fees, that cover lender fees, title, escrow, and and more, appraisals and so forth. So I have some real examples for you guys here in a bit. So we'll cover that as well. All right, moving on. Loan programs at a glance. Okay. Again, I can't stress enough, not everyone fits in the same box. You are all individual, myself, everyone, we're all gonna have different incomes, different credits, different profiles, right? And so want to make sure that you understand that, different options have different solutions, starting with conventional loans. So conventional loans, I would classify them as your vanilla ice cream type loan, right? Plain, general. Most buyers tend to fall into that category. Minimum down payment falls between 3 to 5% down. I know there's credit unions out there that offer their own exclusive programs. That and every bank, every lender is going to have slightly different down payment requirement, but that usually falls with a 3 to 5% down. Credit score. Most lenders want you to have a 620 FICO score. That's now one thing about your credit score. They use the middle score. So if you have three different scores, let's say you have a 620, a 625, and a 630, they're going to grade your credit profile on a 625. So here, the minimum credit score for that is a 620. So it's best for anyone who has strong credit, long-term ownership. PMI drops off with 20% of equity, which again can be within time, and you paying down the balance of your loan, you can get rid of that mortgage insurance premium that we were talking about for not putting 20% down. FHA. FHA is used a lot more than people think. So it's a it's a great product for first time home buyers. The down payment, 3.5% down, credit scores as low as 580. You can go as low as 500, but usually requires a slightly larger down payment. So if you have credit challenges that puts you in that bracket, you could still buy a house, but you'd be required to put 10% down. If you can, bring up your score to that 580, it's definitely well worth it. That way you can save on some money. Again, best for first-time home buyers, individuals that may have lower credit scores, and or may have had some, that bump in the road at some time in their life, and so that's always available. VA, again, I love VA. Minimum down payment 0. So again, that is an honor for our service members and to be eligible for that loan. And you know, it, it's a great loan. I can't say more than if it's given a lot of people the opportunity to own homes, and there's it's a way to go, and I appreciate that. VA, no minimum for the credit score. Lenders do typically have what they call a like overlay where they might want like a credit score of 580 to 620. But again, that's case by case scenario. We can look at eligible veteran that can be, or I'm sorry, the individuals that qualify for it are is anyone that's an eligible veteran or maybe active or retired military. And then the best thing about it is, even though you have that 0% down, you're not paying any mortgage insurance. So that's the reason why most service members opt for that loan. It's not having to pay that extra premium for your monthly payments, which is great. Non-QM is fantastic. Non-QM is for anybody who doesn't fit the box income wise or employment wise. And there's so many different types of non-QM options out there. People that get paid on commissions, people that are self-employed, there's bank statement loans, anyone who, if you have a ton of um, equity to put into a property. Let's say you have an extremely large down payment, like 40 to 50% down. There's I don't want to use the word stated income, but there are loans out there for individuals that would otherwise not qualify in any of the other buckets there. Um, and so again, it's summarized by anyone who's self-employed or has non-traditional income. That I mean is a wide um, you know, ocean of loan programs there. So I really like doing non-QM loans. It's just again, it's I love them all, but non-QM definitely is it's problem solving, right? So we want to make sure that everyone has equal opportunity to get into their home. Investor DSCR loans, another favorite of mine. Those are for rental properties. So if you're so these are business purpose loans. So if you are a an investor and are looking to purchase a home, traditionally, banks and credit unions and so forth, and lenders would require you to provide all your tax returns. They would vet you heavily, and they qualify the income differently than let's say a DSCR loan. So, simply put, if you're buying a home and the monthly mortgage payment is $3,000 and your rent payment that you can collect or the rent schedule is $3,000, you basically could qualify for that loan. So it's easy, but there's some caveats to it. So we would definitely want to go ahead and have a a further discussion on your specifics. But DSCR, amazing product for investors. That's made it it's a game changer in the industry right now. Um, One thing with any of these loans, there's some buyers out here that may be able to qualify for multiple loans. So, with that said, a solid mortgage lender will be able to give you the pros and cons of each. Let's say you had money down, but you didn't have enough money for closing costs or something else. So sometimes sometimes conventional loans may be better or FHA might be better. It just depends. So, that's where, your loan officer, your mortgage broker would be able to help you determine what's going to be the best deal for you. Okay. All right. So moving on, let's look at an example for a purchase of 725. So this is basically a breakdown of what it would look like if you were to buy a home priced at 725,000. So again, so many people are so focused on that 3.5% down payment, which is right here at 725. And so we would assume that you'd be financing 699. And people forget, hey, there's third party fees, title and escrow fees. So to purchase the in addition to this $25,000, there's about $4,500 in costs that would, count for the overall transaction. Not to mention, you got to have the property insured, right? So, especially, if you're in Southern California, we're prone for accidents out here. So, whether it's in a fire zone or whatnot, you always want to make sure that your property is insured. So you do have to pay homeowners insurance. We do collect money for property taxes. This property tax ratio is a general amount. Every city, every county is going to have a slightly different variations, typically a little bit lower. And in some cases might be higher depending on the property that you're buying. And then some reserves. So if you add everything up, you're looking at this $35,000. That's the reality of if you're to purchase a property. Now, the beauty of the loan programs that we were looking at is that you can combine these items where you might be able to get assistance. So let me go back to the screen here. So let's assume, there you go. Okay. So we know we need to put $35,000 down in total. That's the cost of our loan. So if there's programs out there that can help you put 3% down towards the down payment and 2% towards your closing costs. So you can essentially have up to 5% down towards your overall price of the transaction. So we do the math, at 735, 5% of let's say 700,000, that's about 35,000. So you pretty much have your whole transaction covered. Now, amazing, right? Yes. Again, there's so many programs out there that we want to make sure that we look at your overall scenario so that way we can apply the proper program to you. But just to give you an idea is, there's definitely methods for you guys to become homeowners without having to put this large amount down. If you're able to negotiate, credit from the seller, that can be applied towards your closing costs. There's ways that the mortgage brokers can lower your cost as well, by getting you loan programs that might offer some sort of credit to help you pay that balance down. So there's a lot of different ways to, get you guys finance. And so this was just more or less a representation of the general consensus of what the cost would be on a purchase. Okay. All right, moving on. Let's see here. Okay. That this last piece right here pretty much covers the the basic loan program or the financing portion of things. So again, just to recap, we know it's important to get pre-approved, right? A lot of us jump on Zillow and Redfin and all the other websites and we start fantasizing about our new home and so forth, but we really don't have, an idea of how much we can afford. And I'll be honest with you, I've looked and played around with those calculators online and they're no help. Like they literally, make it seem like, everything's, daisies and rainbows and that it's not it's not the reality. So you're better off getting the solid information for your specific needs up front. So that way, like when you're working with a real estate agent, you know exactly what to look for, or make adjustments for. Okay, so that's the number one thing. Credit, obviously important. Savings, it's important. You have a lot of different loan programs that we can cover. So bottom line is, let's talk to a real estate mortgage lender, and that way we can get you the information that you need to be able to next go to your real estate agent. So real estate agent. Okay. So again, I'm dual license. I've had the pleasure to be able to help clients in the entire transaction. Now, again, I work with realtors only, and I also work with lenders only. So there's a lot of different combinations that I do. So I've been fortunate enough to cover every single piece of the transaction. I can tell you between the lending side and the real estate side here, this is more of the fun side, right? Because we're actually shopping, right? No one wants to talk numbers. So everyone wants to talk about finding the dream home. So this is this is the fun part, okay? So, what does an agent actually do? Well, couple things, and a little disclaimer here. It says that the buyer's agent typically costs nothing out of pocket, right? Representation you can lean on at no direct cost to you. So while it's a true statement, it's not entirely true. So, most recently there was a couple things that came up in the real estate world where, sellers, it was always a custom if I was to sell my house, I would negotiate, like I would pay my selling agent, right, who's listing my house, and then I would contribute some of the equity from my house to pay for the buyer's agent, right? Why was that done? Nobody knows. It was just done, right? So then what happened recently was the settlement came out and basically said, no, no, no. As a seller, you don't have any requirement to have to pay anyone else other than your listing agent. So as an agent, the first thing you're going to do is you're going to sign a buyer's representation agreement, right? A BRBC. And so in there, it's going to outline the terms that your agent's it's a contract between you and your agent. Okay. So while you can negotiate for the buyer's or your agent's fees to be, paid for by the seller, we're finding it more and more often that sellers are choosing not to. Okay. So just, and again, if you're having that discussion with your real estate agent, you want to have that up front. Like, hey, what happens if we don't? Right? If they don't do that, because that's going to be a cost that would have to be figured out between you and your agent. Okay, so enough of that. That's the legality portion of things. So what do we do? Well, first we define and search for your property. So we look at your needs and your wants, right? We look at your and we put this into a list and we figure out, okay, what do you realistically want? What do you want and what do you realistically need? Okay. And then we have to start narrowing it down by, okay, what's realistic in our budget? So while a lot of our searches may hit a lot of the stuff that, we like, sometimes we might have to settle for a 4 bedroom versus a 5 bedroom, or, 2.5 bath versus 3 bath or whatnot, based off of the area that you're looking for. So, we try to define the property that our home buyers looking for. We look at, so we present homes to them. That way we can evaluate them, the neighborhoods, the value. We're looking at the property in its entirety. So that way, from there, we want to say like, okay, is this property worth, going out to look out to, right? So first we look online, right? There's a ton of databases out there online. Then once we figure out, okay, we narrow down like, hey, I'd like to look at this property or these properties. We're looking at new builds. We'll go visit a ton of builders to kind of get a better feel for what it is that you're looking for. Now, you find the right one on your first take, that is amazing, right? But it usually takes a couple tries just to kind of dial in your taste and your neighborhood and get a realistic idea of your home and your budget and how they mesh together. Okay. Um, and then from there, we look at making an offer, right? You find the home of your dreams, and then like, what do we do next? Well, your agent will walk you through the process of setting up an offer, right? We'll want to go ahead and we'll put the terms of a contract together. This is where we figure out like how much is this home worth to you? How much are we putting down as a deposit? How long is our term? And so it's the details in the transaction. Like, it'll tell us, how many days do we have to do the inspections, which we'll cover right now. But so your agent helps you make the offer, and let's say you make an offer, and the seller looks at it and says, "I like it, but I want to go ahead and tweak this." So then you get hit with the counter offer, and then so it's part of its negotiation. So your agent's main job is to help and define your search, evaluate the properties, and then once you make an offer, help you be that person in your corner to guide you, so that way you're not necessarily, left in the dark to accept, terms just because, right? Now, you do guys, yeah, I mean, right now, depending on your area, market is a little funky, right? There's properties that are in hot areas that take less than a week to sell, and there's others that take more than 90 days. So every area that you're looking for is going to have a little bit different, feature. And so where, a hot property may not necessarily be negotiable. Whereas, let's say you find a property and it's been on the market for 60 days, that seller might be willing to pay for closing costs, right? Or pay for your agent's fees. So again, going back to the art of negotiation, you have to look at you have to evaluate the scenario in its entirety to be able to come up with with a winning offer, right? And so our job as agents, we want to do our due diligence for our clients to be able to meet the win-win, right? That's what that's our aim, is to make sure that that you're taken care of, the seller is happy, and we can move on with the transaction. All right. So here's a bit of a very, very, very general um, timeline of what happens when you once you make an offer. So, I there's a lot of little items on here that that your lender's responsible for, that you'll be responsible for, the seller's responsible, title, escrow. So there's a ton of hands moving along the same direction, right? To meet the closing here. So to meet level five, right? But at its most basic, I would say these are the milestones, right? So it's most basic, you initiate an offer once you've gotten pre-approved and so forth. So you go out, you find a home, and you make an offer, and the escrow opens. So escrow is a company who facilitates the transaction. So they're the legal entity that the money has to pass through, right? The legal title, everything it basically it legalizes the transaction, right? In different, depending on your state, you might go through an attorney as well. So I guess this is more specific for California, more than anything, and a couple other states. If you have any questions regarding your specific state, I can help you with that as well. But here, escrow opens up. You'll make a earnest money deposit. That's part of your down payment, by the way. So even if you have a down payment assistance program, you're gonna need money to put down, right? And that depends. That it can range between, I mean, as low as $500, I would say, or 1,000 to a couple thousand, depending on the price of the house, and then depending on how aggressive the market is, right? So if you have an aggressive market, you might want to put up to 3% down of the price of the house. Whereas, if it's a low priced home, let's say 150,000, you're not gonna put, $15,000 on the contract. You could, but there's no need to. Um, and then so escrow opens up, and then the transaction officially starts. So the first thing we do is, in your contract, you're gonna have a determined number of days to complete your inspections and your appraisal. Okay, your inspections cover like the general inspection of the property. So I always recommend my buyers to look at an inspection report. Now, one thing about inspection reports is that they are paid to make the property look as bad as they can, only because they want to make sure that you are aware of every single um, uh, thing wrong with the property. So, like, if it's missing a electrical cover, on an outlet, they'll say you'll see that come up, and then so there's different variations. Things that you want to pay attention to are the big stuff, right? So things that having to do with like plumbing, the roof is on its last year. Electrical, if it's super outdated, water heater. So there's a lot of things that's, that's part of the property itself that you're buying that you have to consider. So the inspection helps you identify and determine, is this something I want to move forward, right? It's kind of like dating, if you think about it. So you want to go ahead and you put in all these filters, and then you're like, okay, here's your match. But then you gotta go on a couple dates and figure out, like, okay, do I really want to be with this person? Right? So I know, sorry, I know, weird analogy, but the inspection, you got to look at it and say, like, do I really want to commit myself to this property for 30 years? 30 years, right? So if you do, great. If there's things that are wrong, but you can work through them, great. If there's things that are like, you know, the house is infested with termites, and believe me, unfortunately, fortunately and unfortunately, being a homeowner means that you can do whatever you want with your property. And sometimes that means not taking care of it, right? And so, and remember, when you're buying a home, you don't know anything about that property's history. So this inspection here helps you identify these items that, that would otherwise, go unseen. Because remember, we're always looking for the best thing on this particular house, right? We're always looking for the things that we like to make it like, does this home make us feel, warm and fuzzy, right? The inspection is like, hey, this is a great looking house. However, so just know that you have a set amount of dates to be able to complete the inspection, right? And so, what happens if you find something that you don't like? Well, you can go ahead and go back and negotiate for credit and say, you know what, we've determined that the roof has 0 years of life in it. We want a credit of, I don't know, whatever the cost of the roof is. That's kind of big, right? So that's a big job. But that's where the negotiating starts. That's where your real estate agent comes in at, right? If it comes in that you can't come resolve the challenge, then you're well within your time frame to walk away from the property. Now, the inspection is something that you do pay for out of pocket, and it's I mean, it depends on your area and your inspector, but I would say it ranges anywhere between 350 to about 500 plus, depending on the size of the house and what exactly you're having inspected. So, but again, just know that this is put in place for you to determine whether you like the property or not. Appraisal. The lender confirms the home's value and supports the loan. So let's say you find that property that makes you warm and fuzzy. You make an offer at 500,000, but then the appraiser, an independent third party, comes in and says, you know what? The properties in this market are only selling for 460,000, and he appraises your property at 460. Well, there's a bit of a variance, right? 40,000. So your options, well, more than likely, at least in this market, you might have to go back to negotiating the price. So the lender will only, um, they will only loan as far as the value of the house is going to be. So again, so the house is 460. They're going to base their loan amount off that loan amount, not your purchase price or your offering price. So that's the reason why your agent is there to negotiate that price with for you. Okay. Now, again, just like the inspection, if you can't come up with an agreement, then what happens is that you can walk away from the property knowing that you're basically not paying, you're overpaying for a property, that's not appraising for. But again, unless it's, we get back into, during COVID, properties were going for over, asking price, hand over fist. And, a lot of people had that extra cash, even though the banks would only lend to the appraised value. People had extra cash to pay the difference, and they were doing it, right? So in this case, again, depending on the market, it's not unless it's a hot property, it's not that common at this time. Okay, usually it's already marked into the contract unless you're lowering your contingency dates, but it's there as a protection for you. Okay. Now, moving forward, during that time frame, though, too, you'll be providing your lender income documentation because they're going to want to know, hey, are you still employed? Are you still making the money that you showed us originally? So there's things that you're going to have to cover. Part of it's going to be through, you're going to have to sign documents from escrow. You're going to have some loan documents you have to cover, and then your real estate agent is going to be also sending you information your way for you to sign. So there's all this is compacted within 30 to 45 days, right? So it's a rush and it's a whirlwind. But with the right team, it helps, create a smoother transaction. But it's just it goes with the territory, right? It's part of the home ownership experience. Final approval. Final approval is where the lender basically says, "Hey, we like the property. It's worth what it is. We like, we verified your loan, your employment details. We verified your income. We verified your assets for the down payment. Everything's good to go. So you got the stamp of approval. Next, we move on to our closing. So the final approval basically says, that's the, you know, what they say? um, if you know if you have no other questions or quarrels, so be it, right? So we're gonna go ahead and move forward, and we're gonna go ahead and go to our closing. So the closing is the celebration, right? We've gone through minimum of 21 to 30 days of paperwork to get to the final phase, which is the closing. So the closing is pretty simple. You sit down with the notary. The notary is going to have a pile of documents for you to sign, all legal documents. And basically, it's going to be, items such as, your deed to the home. And, there's a lot of lender documents that are required in there. But at the end of the closing, you officially become a homeowner. All right. So again, this is a super simplified version of things. And it's a great process. We can close loans as little as 15 days, if you can imagine that. And but the standard average that most people, when buying a home is roughly about 30 days. So again, if you're buying a home from someone who's looking to buy another home, right, a contingent sell, then this time frame here might be a little bit longer, let's say 45 days. So there's no right or wrong. Just understand that the inspections, appraisal, are all there for your protection as well. Okay. Let's see here. Moving on. All right. Um, so not that this is the right way or the wrong way, but this is my way. So, since I'm dual licensed, I have the opportunity to do both the real estate transaction and the lending side of things. So, what gives me and people in my in my position, I guess, extra superpower is that we can read and we can see and identify, anything that may come up in the transaction to basically tackle it before it becomes an issue, right? So if I'm focused solely on the transaction for the lending side of things, I'm only concerned about just talk to me about numbers. On vice versa, if I'm looking at the real estate side of things, I only care about the property and so forth, right? It's a lot of work going on. But what happens is when you separate the lender and the agent, well, a couple things. Details get lost. There's not, there's a lot of times I've seen where individuals, loan officers and real estate agents lose a deal because, the lender wasn't up to date on certain conditions, or they didn't know something about the property that popped up because the agent was busy with their other clients. So that's huge. Unfortunately, there are a lot of deals that do tend to fall out, and communication tends to be the biggest one that I've witnessed. Financing issues surface late. That deals fall apart. Again, as a lender, I obviously have my due diligence to my clients and so forth. And so, if things come up late, let's say, something silly but comes up, say someone goes out and buys a car and all of a sudden, like, the agent's like, "Oh my gosh, I just found out the client bought a car." You know, it's funny, but at the same time, things like that happen all the time that make these deals fall apart, you know? And so like, you know, if you're with them at the hip, you might see these things coming, or in discussion, sometimes people are like, "Hey, I was talking to so and so and they told me this." I was like, "No, no, 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 no. That can't happen. Let me jump on the phone with them." And so, anyways, so a long story short, agents sometimes don't understand how the consequences that these decisions that homeowners make along the that 30-day route happens. It can impact the file. Not again, I'm not saying that's their fault, but what I'm saying is that we have second set of eyes overlooking the entire file. Um, you're the only one relaying updates back and forth. So, as a homeowner, if I'm talking with an agent, for the most part, I like to communicate with the agent myself. But let's say I'm working with a real estate agent of my client's liking, and then the client's like, "Hey, my agent wants to know, when are we?" when are we gonna get docs? So like, I'll pick up the phone. I'm like, hey, let's just talk, right? Um, so when you're one individual, you know exactly when your docs are coming, right? So that's again, it's a superpower more than anything. One coordinated team, financing and contract timelines, they move in sync. Again, going back to all those hands moving at the same time, so you're dealing with title, escrow. There's a ton of people in the transaction. If you can limit that number to, let's say, three or four, I mean, that's golden, right? Because the last thing you want to do is get confusing and get a ton of emails that are that'll get you lost as well. Again, problems get caught early, because we're one individual or we're within the same team, so we're able to identify things a lot earlier and get to those before they become an issue. So that's a great point. And then one point of contact from finish to start. I love my clients. I would say that I've grown to become really good friends with majority of my clients just because we're working towards a goal, and when we get that goal accomplished, there's that relationship, passes on seasons. So I'm very thankful for all of them. Um, what questions have we not asked? Well, couple questions that come up all the time. Okay, so this is and I'm sure you have questions as well. So you feel free to go ahead and message me, or put them in the comment box, and I'll be happy to answer them for you. But these are again questions that over the years have come up quite a bit. Okay, do I need 20% down to buy a home? No. You can put in as little as 3 to 3.5%. There's loan programs out there that put the down payment for you. You do need money for an appraisal. You do need money for an inspection. You do need money for your earnest money deposit, right? So if you're to tell me, well, how much is that? I'd say save up $5,000 and you'll be in a good spot. That's just a generic number, by the way. What credit score do I need? Well, it depends. What program are we going with? Are we going with the conventional loan, right? 620 FHA program. I can get you financing at 580 or lower. Um, are you a veteran? Are we doing that? So it just really depends on your overall loan program that we're looking for. How long does the process take? Typically 30 to 45 days. I close deals in 15 days. I have one transaction right now that we accepted an offer. It's 21 days. And so pretty simple, straightforward deals. The more complex the deals are, we obviously want to go ahead and give ourselves a little bit more time because, we don't want to, we don't, I love helping out my clients, but I also, don't want to stress out because the deadline's coming up. So I look at the information and I give you an honest assessment. Does hiring an agent cost me? Again, in most transactions, no, but they're becoming common. That's the reality of the real estate industry right now. Okay, so when in doubt, you want to have a contingency plan, right? But that's something that you can discuss with your agent. What are the closing costs roughly? Provided that for you, a round number, 2 to 5% down of the down payment, or excuse me, of the purchase price. And then again, how they're paid. There's a lot of different ways we can tackle them. And then what if the appraisal comes low? Uh, Again, we renegotiate the price. We can do an appeal to the appraisal if we're confident that there's comparables out there that we can fight the appraisal. We'll definitely fight for you. It's just we need to understand, is there information for us to leverage, right? If it's not there, then it's not there. So either way, we'll figure it out for you. And then um one thing that's not on here that I've been asked most recently is, what happens if what happens if I buy a house and something happens to it. Like, let's say something comes up that wasn't addressed or didn't come up in their disclosures, right? It happens, right? They're houses. These things are living things, more or less, right? So let's say you buy this house, and just a quick example, and the plumbing goes out in the bathroom, and there's a like a major leak that happens, right? Well, the homeowner they didn't know that was going to happen. There's just no way to determine things. Things like this happen. So, you know, while you do have your insurance in place, you always want to ask your agent whether or not, and most agents do this anyways, they offer to have a home warranty. And the home warranty is kind of like that extension of if that if this covers and any issues in your first year of your home ownership, right? So I can't stress enough on the home warranties just because you know things happen. It's just by nature. It's not that the previous homeowner um, knew about things, but if it's just another safeguard for you to be able to rely on, right? So it's just uh, um, more or less it's a lost my thought. It's just another way for you guys to have that peace of mind, right? That's what I was looking for. Um, Again, these are just some questions that normally have come up. Hopefully, I've addressed as much as I can here in these slides. And again, I can make these slides available for you. But the next step is, really looking at your situation, and your situation can be, put into context within the quick 15-minute call. So my recommendation is, you're already looking at Zillow. I know you are. I know you are, right? Yeah, you're smiling because you are. So before you do your next move, or you click on that contact me, because those agents know nothing about you, by the way. Don't get me started on that. But they're gonna try to sell you loans up front and then capture you into their web of contacts, right? So you want to go ahead and if you don't want to be part of that, then feel free to contact me. More than happy to help you. One thing I didn't mention earlier was that I am licensed or dual licensed to do real estate in California. And I do have my my mortgage brokerage license here in to do home loans in California as well. And I do have additional state licenses for mortgage loans, right? Not for real estate yet. I will be expanding into other states, but for now, I can do multiple states. So feel free to call or text me um, let me know what state you're in, and if I can't do it, I'm more than happy to point you the way. So I am working on expanding my network with other realtors that are in other states, and happy to help you out whichever way I can. So again, the advice is free. The contact information is there. So feel free to give me a call or shoot me a message whenever you guys are ready. Okay. So again, thank you so much. My name's Jose, and I appreciate you guys making it out and hope you have a good night. Let me know if you have any questions in the comments. Take care.